Hey, what is going on, everyone? This is Simon here from RunProfits Trading, and welcome to another weekly update on the markets. So, let's get straight into it, and we'll take a look at Bitcoin to start with. So, Bitcoin has found some resistance on this descending channel. We've also got the 100 week MA and also the support from the end of last year acting as resistance to the price on Bitcoin. So in the past I've said that I think Bitcoin is likely to consolidate and be range bound for some time over the next few months, with likely resolution occurring later on in the year. That view hasn't really changed. I am still optimistic that the low is in for Bitcoin, and I am looking to accumulate some more Bitcoin personally, close to this ascending trend line. I accumulate a little bit of Bitcoin every week as it is, but that's where I'd look to accumulate a little bit more aggressively. And overall, I think Bitcoin is looking quite constructive here. So yeah, that's kind of it for Bitcoin. Not really too much else to report. Obviously, we do have the halving coming up, and I just wanted to take a very quick look at a model that a few of you are probably definitely familiar with, which is the stock to flow model by Plan B on Twitter. And just due to the fact that in the past, when we've actually flipped from the purple dots to the amber dots, which represent the days until the next halving, so when we've actually gone through the halving, we've then seen quite explosive price action following that, and ultimately this sort of bullish move that we've actually seen post-halving has always resulted in a parabolic price move, which has taken us to a new all-time high. So yeah, I don't want to spend too long on that one, but yeah, I think there are reasons to be bullish. I mean, not only do we have the QE as well coming in, but we also have the BitMEX funding, which is still negative, which is another sort of good indicator to trade against. So yeah, I do believe that the low for Bitcoin is in for 2020, and yeah, I think that over the next few months that well timed entries into Bitcoin, say under 7,000 in the certainly the 7,000 to 5,500 range, will prove out to be good over the longer term. So moving on to stocks, and to be honest, this is where all the action really is right now. We spoke a week ago about how the S&P had rejected its 200-week MA and also this channel which had contained price action from early 2018 until the start of this year. And really this is in line with our view that the worst is not yet over for stocks, and we still have further downside to come. I mean, let's face it, guys, we are going into a recession, and there's a high chance that it will actually be a depression. And I mean, this is not going to be another late 2018 where we saw a sell-off and then like this V-shaped recovery. I mean something like this is just not on the table for me at the moment. You've just got to be mindful that the downside far outweighs the upside in stocks right now, and for that reason I'm not going to be looking for long positions in stocks just yet. I mean, if you look at where we are right now, I do believe over the next couple of weeks we will see a retest of these lows, and I mean a retest of these lows is another 12% lower. I just don't feel that this will be sufficient for this bear market. I do think we come down to at least around the 2k level on the S&P, which would be a further 20% drop, and potentially we could look to come down further towards the 1500 level, which is 40%. So yeah, I just think the worst is not yet over for stocks, and we need to be, everyone needs to be prepared for these scenarios to play out to the downside right now. Nasdaq. So gold is a market that we flipped bullish on last week, and I do truly think that gold has a really good chance here of taking these highs out, and we might actually look to add to gold positions above 1700. It's going to be quite a big week, to be honest, for gold. You know, can we build on this momentum? Can we get ourselves up to challenge 1700 and over the next couple of weeks look to break out, or do we just sort of fall back over? It's probably a little bit early to say, but as long as we stay above 1500, then there's no reason to get overly bearish on gold. There's no reason to look for any short positions, in my opinion. So obviously oil, we saw a crazy move in oil this last week, a really strong bounce of around 46% from the low. This is obviously around the Trump comments, and all I would say is if you're trading oil, just to be mindful, this for me will be a buy the rumour, sell the news event. So I'll be looking for oil to rally into any sort of possible rate cuts that get announced from the Saudis and Russia, and then when these cuts are announced, it's more than likely that oil will resume its down move. And then just very quickly, a couple of stocks we were looking at. We were looking at Uber to come back down and sell off in our last video. This is obviously playing out for us, and I think the real question is now is does Uber take this low out? Does it potentially try and create a higher low? So, you know, do we get another potentially 20% of downside, or is the downside going to be much more? And do we get, you know, down towards single figures for Uber? I mean, right now I'm actually leaning towards the latter, but let's just wait and see. Certainly, if the S&P breaches lows, I can see Uber coming down a lot lower. And similar with Tesla. Tesla's starting to struggle. I did mention a target of 261 a week ago, and yeah, I think there is a real possibility that we get back down there, but again, we will look for the S&P for direction, and certainly any weakness, then we will be looking to take shorts in certain stocks. So yeah, sorry to obviously end on a little bit of a negative note there, but obviously the positive is that once this bear market is over, there will be opportunities to buy some of our favourite stocks at much lower prices. And what you don't want to do at the moment is commit all your capital saying, oh, you know, we've seen 25% come off stocks, let's go into them here, only to see those stocks fall another 30-40% in some cases. And then obviously you've got literally half the number of shares that you could have had you been patient, had you waited for this bear market to run its course a bit longer. So obviously, if you're not comfortable with shorting stocks, my advice would be to focus on preserving your capital for now. Try not to get too emotional or too dragged in. These markets are difficult to trade. If you're you know, new to trading, or you're not confident in shorting these markets, there's absolutely nothing wrong with just adding to your cash position and preserving your capital, and then looking to get involved in the long side on a couple of months' time. And obviously these weekly updates will continue, and as soon as it looks like markets are ready for buying, then I will be communicating that to everybody on my channel. So we'll leave it there, and obviously thanks again for watching. Follow, copy RunProfits on eToro. Also I've set up a Telegram group, so I'll put the link in the description, and yeah, hope everybody has a great week. Cheers.